Okay, we're gonna go through scanning, how I look at stuff. All right. Most of my scanning this time of year is only for earnings because I know you guys like to gamble and try to find options and try and make 100 to 400% every week until the earnings are done. So this is how I'll start. Okay, so this goes back to NVDA high volume exhaustion gap target 64 bearish. Okay, this is before earnings and all that fun stuff. Okay, I love this. I think you should take the work professional out of your profile description, but I love that crap. All right, so here, what do we got going on? So I got myself an exhaustion gap here, right? We have a gap today. I talked about it today. And today's noon's Monday noon video, midday, whatever. All right, so exhaustion gap, right? Bodies are in here. Volume spike. I have NVIDIA heading to 64. Now I picked 64 because that was the launching pad. It was like the price in September, whatever. But this is how I try and get the reaction out of people. The deal is I believe there are more shills in stock twits than actual real life human beings who are trying to piss away their student loan and stuff, their inheritance, whatever grandma gave them. More shills because on Cliff, when I started pointing out that $2 puts were being traded on Cliff on, what was it, Thursday? Guy told me to go out and get a burger and have a beer. He basically said, dude, okay, why we're here to fleece these guys. Why aren't we just, taking these little, Cliff guys to the woodshed? It says professional. It's like, well, but that's not my job. My job is to point off, whatever. All I know is you just bought the puts on Thursday and you're rewarded on Friday, and until Cliff doubles, you don't have to worry about Cliff anymore, in my eyes. You made your money from Thursday to Friday, and you have, until it doubles, then you don't have to worry about Cliff anymore. My eyes, Cliff is done. It's a done trade. One day, made your 200% left kind of thing. That's how I look at it. We're going to, another guy, we're going to buy someone on Monday, and I don't care. Whatever. Make 10%, good for you. All right, so exhaustion gap. So exhaustion gap retested. This is Thursdays at 6 a.m. Red alert, and then NVIDIA. Okay, so this is where I'm starting. Okay, so then what I do is it's a gap, right? So I'm going to go to, is it still recording? Yeah. So I'll go to some sort of screener thing. Oh, we're done. We're done with tonight's video. Where do I have it here? Gaps. Okay, gaps up. Whoops. You blarney hole. What am I looking for? Scan. Read predefined scans. Okay, so here's the stock charts. Predefined scans. These are all scans that are predefined. 52-week highs. Right? That's where you're going to find the next, 6,000 times your money. That's where they're going to be at, right? Volume gainers, crossover. So what do we have today? Today we're working on a blow-off thing and a breakout on the Russell, but I'm looking for gaps, because if gaps worked for NVIDIA, maybe it'll work for something else. So I hit all the gaps, and it gives me a list of gaps. Now I can sort it. I can also search through here. Maybe I want RSI over 70 or 80 or 90. Okay, sort by volume. How about sort by symbol first? Is Apple in here? I swear Apple had a gap. Well, so the scanner didn't work. I want to sort them by volume. New list. Run them down. So I only have, 84 to look at. So now I'm sorting them by volume. Is this today? So one of these were up 100 and whatever, 1 cent, 2 cents, go away. What do we have for 3 weeks? Or 3 months, 1,200%. This ELL Wellness. 15 cents, up 16. Yeah, that's kind of a funky monkey, but I can't turn you guys onto that stuff. You'll get yourself into trouble. Oh, I'm supposed to be working there. All right, China. So China's numbers just came out. All right. All right. So what do we have? 6:30. All right. So running down here, this valet, whatever. All right. So what do we have? And what do we know? It's all started red. On balance volume's pretty strong. This is a daily. This is part of that one sector, whatever it is. Industrial steel. That's fine. We have a gap here. We have another gap here. Opened here and closed here. Closed against pivot. Or this pivot R1, R2. So close at R1. Options, yeah. So in my case, I'd write some calls, say 12.75. Or I can write some calls in at 8.75 or $10 or something, and then collect some premium because it's frothy, lots of volume on here. It's up here. The whole deal is if it fills this gap, everybody that got in today, 64 million, you saw with what happened with Cliff, same type of deal. So it just opens lower and people fart. And that's the story. They sure as hell didn't want it at $3 and something when non-valence volume was bouncing around on the bottom. But you triple it, they're more than happy to jump on board with a nice spike in volume, right? So my job as a floor trader is to take away their money. So it's a daily. So it's one of those where you look, here's the first one, here's the second one. It's like, okay, is there going to be a third one? So as we run through these, we'll begin to see some reversals in that. Here's a good one. ZSAN. Opened up here. This is a daily, right? Opened up here, traded all the way up here, and closed all the way down here. This is a lot of air. This thing's going to fall like a knife. That's what it should do. Not too much on the money business going on here at all. They all got excited today. This thing went from 45 cents all the way up to $1.12, and no one was interested. Look at that. No volume down here. No volume, no volume, no volume. Woo-hoo! Look, we found something that's in the healthcare biotech. Whatever. I don't care. All I know is nobody wanted it. And then they wanted it here, and it closed here. So you know that everybody that was in here is like, holy cow, get me out. Here's another one. Oh, this is even cuter here. Look at this one. That's it for today. So what do we have? We have 23 million people stuck in a range of high and low. What is that, $1? So it gaps up. Oh my God. It gaps it's up $6.50, but everybody is stuck in a range of 45, 55, 63 cents. Oh my gosh. I cannot laugh hard enough. 23 million people. All you can see down here, volume wise, up $6, but they're all stuck in a 70-cent range. This thing is like, woo, lead balloon. I think if it opens down here, I love gap. Okay, woo. What do I know? All I know is if I come in there and offer it, I'll offer one shirt $55 just to shit on 23 million people. What does it cost me? It cost me $1. I'll sell one. It's short, so I'm going to be careful on that one. But do I have options? Yeah. Oopsie, pre-market. Oopsie, I offer one at 55 and buy it back at 54. Cost me $1 for commissions, $2 for commission, and then if I can pull it off. But you know what I'm saying? I just pissed off 23 million people or shareholders. Here's a run. Gaps open. Here's the low. Here's the high. Pretty bullish. 28 cents, so I'd be bullish too, right? How can you go wrong? Just for shits and giggles here, you have a shoulder, a head, and another shoulder. If you measure at 12 cents to 20 cents is 8 cents. You go up to 28 cents. You'd want to get out at 28 cents. There you go. It's called the measuring pattern. Here's another one. This is a veil, same thing again. Gapper, took out the pink dots up to here. I'll give it a little bit more. I mean, when you talk about 1050, 1175 isn't a problem here. It is moving at a clip here. Remember, this. They didn't want it down. They sure as hell didn't want it at $3, but you triple it, boy, they really want it. That's how I look at it. Look at this one. This is a Rami Cross thing. Woo! This is the #1 steel maker in the world, folks, right here. And I went and pooped on it today. All these bodies are here. We got another one up 46 cents in the range. It's stuck in a range of 16 cents. It's up 46 cents. This is too freaking hilarious. I got to save this one. No, okay, hold on a second. How do I, oh, now you did it. Now you did it, Kev. All right, so annotate. All right, I need to point out the change. 46-cent change, 46 cents. 46 cents of change. Change. It's Janie. 40 cents range. And this is even more freaking hilarious right here. Oops, I need this. Is that right? High and low, 16 cents. 16-cent range. No fisting required. No, it's going to do it all on its own. Abandoned baby, I think that's called. Whatever. We're sending it on its. Oh, I better tell them who's the important one. Who's the talent here? Who's the talent? Oh. That's right. I'm the talent. All right. So how do we make it just all nasty colored? What kind of nasty color do we have? Is that a nasty color? Who is that nasty color? It's just piercing. Whatever. That's me. Let me save one. MT. Share. Poor bastards. Bastards. All right. So I rambled on all through all of these, right? Yep. Right here, right? Math is right, Kev? 16-cent range, high and low. 16-cent range, 46 cents up. One abandoned baby. Cute. Leave this one be. Sino. Another one of these here. CC. Here we go. Chemicals. A bunch of bodies. They're all stuck in this thing here. 10 million of them. Up $4 in a range of $1.30. So all I have to do is fill the gap, and 10 million people are like all upset. I'm gonna do this real quick here. All right, and the whole abandoned baby thing. The abandoned baby, you won't know that until after the next day. If the baby's been abandoned at this middle, or like this one. What's this one? Chammers. All right, if this is abandoned baby, the trade would come down here. All right. This Hindustan Motors, Hindustan India, .in India. Hello to India, folks in that region. All right, we opened up here, we gapped, opened up here, traded higher and closed lower. Ouch! All right. Lots of indicators. This is the difference between stochastics, 's and RSI. RSI will take, the net movement into consideration. Stochastics will actually take the high, the open and the high and all of that. So you string a couple of these together where they trade higher and close lower. Okay, trade higher and close lower. That reminds me when the short on Disney back in August of 15. We traded higher. I'll find the video link to that. Traded higher and close lower. Traded higher and close lower. August of 15. Holy buckets. We dropped. Okay, so that was the Chinese deal. All right, so that's the setup then, huh? Now that was the Monday 1,000 points down. Buy it. Okay. All right, so we have a gap. All right, but a couple of these here, like this Hindustan Motors, opens here, trades higher and closes lower. Bad bueno. Let's do it again tomorrow. Open higher, close at the low, but it's still positive for the day. So you're actually having divergence. Too many bulls, not enough afternoon, not enough pros. The pros are abandoning the stock at the end of the day. Global whatever, blah, blah, blah. This one is yada, yada, I'll pass. God, I'm not going to have to go through 9 pages of this crap, do I? They're all basically the same. Went through volume anyway. 6 cent stock. Oh, yeah. Remember, Kev? This is the blow-off phase. All this little stuff. 15 cents, 10 cents, 12 cents. This is page 2 of heavy volume. All right, so, this is when I talk about, this is the crap. Well, here's a $4 one. All right, so this is a decent setup. Ewell. And that one may swing higher this way. That's how those usually play out. ADX and stuff is ready to go. EWLL. All right, so I go down to my little gizmo gadget, hit this EWLL. 15 cent bid, 16 cent ask. I'll take it, lock it in. 25,000 shares, you bet you whatever. Talk to you later, bye. All right, so... all right, gap subs. All right, gap sub. Skip on that one. Good Lord, what a bunch of crap this is. I'll get through the... Obviously, I found all the dimers here. Huh. I can also scan so I can get rid of these or just take these. Here's a 7 cent. No, we'll pass. Can't turn you guys onto this stuff. Oh, what's this one? Zoma. I remember this one. XOMA. Look at that. Woo-hoo! And it washed up back here at the beginning of the year at $4.16 and only dropped another 20 cents. And we got a bounce on it. 20% bounce. So, but it hasn't done anything yet. It's done that kind of game before. Zoma. Here's a huge money flow into this one. Something, this is a weird 7 cents. I hate blow-offs. Because everything's overpriced in my eyes. It's like I come from the commodity side of stuff. How much is a frickin' steak in the store? Not Miranda, Gold Corp, MRDDF. It's how much is a frickin' steak? Oh, here's one. Look at this one. Here's the open. Woo! Came all the way back down. It's still up. Still up for the day, up 12%. But if you bought the open, you're not up 12%. You're up scratch. Here's one, though, where it opened at the low and closed at the high. This is gold. So this is going the wrong way. Did gold go up today? No, this went the other way. Oh, man. Money was in here before. It's moving on. All right, maybe some RSI divergence here. What's this one? XOL. That's a penny stock. Wow, Kev, seriously. Holy buckets, these are all bad. Here's another one. Opened here, traded higher, closed lower. Bad bueno. Oh, yeah, closed up. If you bought the open, you lost money. You're out money. And you're like, oh! That's how it's going to play out. And here's one. You got the T-cross here. Got the next one open at the high. That was it. Jammed right at $4.40. What's this one? AEZ.TO. Yeah. Oop, what's this here? Vancouver, 4 cents. How did I scan for this? 84. Where am I at? Page 6, I suppose. One penny to 2 pennies. Good Lord. Front range. That's kind of interesting here. Bodies came out of it, got washed. Maybe a swing up to 55 cents on here. Front range. FRK. Yeah. Rare minerals. Yeah, all this is being talked about. Stuff for cadmium and that. Look at this one. They ran into it and this was it. Oh, what is this one? This is British. So this is pence, whatever those are. Poked its head through. Whopping 45,000. Can't think of much more. So, okay. So we ran through that. So I need to go and look at Apple here. I'll go here and find one. Let's take a look at Apple. Apple. Oh, you little scum sucking. By the way, that's professional. Apple. AAPL. You mother. You know. Oh. Kevin, you are too fast for the computer. Oh. When you're highlighted blue. When you're highlighted blue. Oh. Oh, for shit's sakes. To stop raising my blood pressure. Oh, that's why. This is my business software is going. Okay, so what do we have? Daily? All right. All right, Apple. I thought we had ourselves a gapper today. We did have a gapper today. So Apple gapped up, right? Yeah. All right, right, yeah. So Apple gapped up. Bodies came running into it. And there we are, right? And I thought it was in a daily. Oh, you're just killing me here. All right, so what do we have? Unbalanced volumes taken off from here before earnings. So this is an earnings thing, but we had another gap on here. Okay, so had a gap, didn't have a gap, whatever, blah, blah, blah. All I know is that what do we have for range? It was a dollar range. It was over $1. They're all stuck in here, 23 million bodies. All right, so the deal is it for to see about tomorrow for an island gap the same way, right? How do you not? Oh, I know what to do. Stop logging it. It smooths things together, Kev. No, that didn't do shizzle either. And almost, okay. All right, so it opened here and then traded lower at the end of the day. So what are we looking for, Apple? 129.5 kind of thing. All right, so here on Apple, what do we have? Gap down to my 126 level, right? Okay, so this is the 126 short from when it was at 120. This was the short area. It actually took off from the short, which is fine, whatever. It didn't open up the next day until 28, whatever. Okay. So what we're looking for here is the short side on Apple, but the puts today, what do we got? Volume and open interest. So this is open interest, 130. We closed at 133 and change. Here's volume, high volume with low open interest, 133. People came in and probably bought these at the money. I'll buy some too. I'm looking for, how about percent change? All right, so, okay, today's only Monday. So these puts, last half. So, I mean, even if it goes back, or even if it goes up, I mean, you can make 50% if it goes back up to, does it show the high? High. So what do we have? Here's $1.10. So from 80 cents to $1.10 is 30 cents, blah, blah, blah. Here's 30, 40%. It loses half in one day. You're good till Friday, right? 4 days, you're good till Friday. That's how I look at it. They lost half today? Well, I'll take a third on it, minus freaking commissions. What was the low on it? But that's what I saw. A lot of these, what was the low? 57 cents, 80 cents off the bottom. So some people are looking at a double at 114. You're looking at 120. So that's, some people are going to double their money. But that's the whole, all it has to do is bounce. Apple just has to, all they have to, well, we're only going to take, if Apple was up $1 or it was $1.20 and you pull back a third of it, 40 cents, well, 40 cents, you're at 132 and change, and that'll be Tuesday. You can short these things here. Think of that. The people that bought in at 57, 58, 59, 60, they can sell this over here. If it gets there, 60, 65, 77, and get a free trade or get paid to put on this trade. The maximum they'll make on their free trade is $1, right? You follow me? They bought the stuff at 60 cents. The 132s get to 60 cents, 63 cents, 66 cents. Sell it. Their cost to buy this one is covered by selling this one. They get a free trade, maybe get paid, and maximum profit is $1. Boom, you're done with your Apple trade. Go next, move on. So, in regards to scanning, all right, so that was just the idea with gaps. All right, stock twits. All right, so here what I did was I just took 52-week high stocks, right, below 3% below the high, overbought with an RSI of 90. Because I was doing the gap thing on here, I think, technical 3, gap up. Gave me 3 of them. Gave me $25 stocks, were Wolf, which looks like a buyout, and this Snow, whatever, $7 stock. Not much to go off of. Yeah, so how about this one while we have this real quick? Presets. Quarter, 50%. How about this one? All right, so quarter, stocks that are up. Here's 12 pages. There's 20 of them on here, so there's 240 stocks up here. Well, that's up a quarter, up 50%. Where's the year to date? Year to date up 100%. All right, some splits, 2 pages. These are all, what about RSI over 80? Z-Stand, that one just popped up. That one moved, they all gapped up. Look at this one, XBI, something, 50 cents to $2, whatever. I need to go back one here. This Z-Stand ran up here. What was one where it ran higher and came back? Okay. Z-Stand. But, I mean, the deal is you have to come in figuring out what you're looking for. PME, what's this? Pressed up against it. So, you know, going back to the whole scanner deal. Yeah, let's see here. All right, so that was the world famous scan there. Another scan. Come on. Scan. Oh, predefined scans. All right, predefined scans. All right, so once again, 52-week highs, bullish, bearish. Oversold, improving RSI. How about overbought with a weakening RSI? Overbought with the declining. So I have 55 of those. Stored by volume. All right, so what do we have here? So here's an overbought with declining RSI. Okay, so these things are over the RSI, relative strength, right? We'll store it, new chart, eyeball it, 55 charts to run through. This will be on the short side again too, because the market's running. Great. All right, so this has had a couple of reversals on here too. Excelsis. So what you're looking for here is if there's some follow through strength and you want to watch it internally. ADX is still running in that. It's basically broke up, but it came back. So you want to watch these intraday. This one here too, if it pokes its head on up, you know, maybe up to R2, you want to whack it for those people who are in India. That one's up there. Any type of strength up in here. That's Toronto. Here's one. Bank of India. You want to get defensive on. Max Linear. $27 stock. What are you? Semiconductor technology. Okay, so yeah. So the swing on here, if you're long this thing, start writing some calls against it. Bodies moved into this one, headlamp. There's a full reversal here. This one's running into problems here. This one, they're just marching up. Nobody's interested. It's 255 to 320. No one's giving two shakes about it. This one's Massimo. Oh, this is the one we put on the goofy spreads for. Okay, that's cool. Remind me to take a look at it. I got to get rid of my stocks and get into the future stuff. Oh, here we go. What's this? Tedford Homes. Lots of bodies, lots of money flow. Homes. So look for some home issues in London here. Too many bodies are rolling into it. Doesn't jibe with what's coming off of Bloomberg either. This is India? India? So what do we have? So India could be weakening. India had economic problems. I wonder if India means anything to the world economy. Tata Motors and all that fun stuff. And maybe we'll get a whole bunch of Tata cars in America. Loads of Tatas, Kevin. Chi-Chis? What is this brain dead thing here? All right, I'm going to move on to something else here. I need to move on to currencies or something to entertain myself here. I do a lot of this. Basically, I'm just waiting for tomorrow. Bodies, look at this one here. Check this one out here. Foundation Medicine. Okay, so we get the hard run unbalanced volume, right? So we get a breakout here at 24.5 one day. Let's crack this sucker open here. Let's see what that looks like. Soybeans. Yeah, soybeans are dumping. This is how painful it is. This is the downside of traders here. Okay, so you get your breakout. All right, so you break up from 24, you go to 27. So you're making 10, 15% in one day or so change. Then you get, here it opens, trades higher, and trades lower, right? What is that, 2 months? All right, so here you get the inside day. The following day, it opens here, trades higher, closes lower. Negative. Is this foreshadowing for a few stocks we saw like that? Probably. I'm going to say, oh, yeah. So now you have people who are in here, decent amount of volume, not as much volume today, so you didn't have as many buyers, plus you also have a lot of hope people. Opens a little bit higher and closes lower. Closes down 8%, $2. So now you're worse off than where you were for one of the breakout. So I expect that patterns that look like this, we'll see this on Tuesday in the United States. And this one was FMI. So this is just an example. Doesn't mean this thing can't continue on to 32, but I'm just showing you what happens when people get sucked into stuff. You know, you also need to take out all of this, you know, kind of refill the gap. So, but I'll leave that at that, and I'll point it, you know, it's the whole thing comes down to, you know, the whole scanning comes down to you have to figure out what you're going after, right? Markets at an all-time high, scan for stocks that, you know, these, you're looking for weakness. What am I looking for here? Well, I'll leave it at that, right? Yeah. Okay, here's another scan that I just ran. EDX is greater than 60 and Scooter is more than 10. I'll run it real quick. EDX more than 60 means that the stock has been moving pretty hard for a while. It's in a very strong up move or down move. What do you know? There's Apple. I only have to fumble through 202 of these things. New chart list. We can run through these real quick. But this is what I do. And then, of course, I have to go out there and go, look, you're going to have to short Apple. It's going to drop $3 tomorrow. And they're like, oh, you're on drugs. That may be. I don't know. I'm on what, a half a gallon of coffee before the sun comes up. Zowie Batman. Here's one. Oh, it's India again. Oh, these all popped up before. Oh, I posted that one earlier today. Cenex aluminum. You know, nobody wanted it back in a couple of years back, but they sure as hell want it now. I'd have to say that this is probably one of those last wedge deals here. CENX options, you betcha. So where we're at 16. So go to here, go up to Cenex, CENX. I'm probably wrong. So we want to sell. We want to sell a vertical, catch a credit. Credit is 31 cents. There's a dollar spread. So my risk is, so we want to make this a 50-50 deal here. Well, we'll try it. We'll try this. It's 47. Until cancel. So my risk is 53 cents because it's a dollar. I get 47 cents, whatever, take it, goodbye. Now we think it's gonna top out, but we're gonna get these banana heads that buy their options a little further out. So we'll sell a vertical here on the call side, the following month or following deal. Credit 63 cents, and there's only a dollar difference. Well, that means my risk is only what, 37 cents? I'll take it. Actually, I'll set it to 67 since that was the year I was born. Whatever. So you following me? There's a $1 spread. They're going to pay me 67 cents. My risk is from the dollar, so that'd be 23 or 33 cents. My risk is 33 cents plus commissions. I pocket 67 cents right away. Thank you very much. Have a good day. Bye. So it's basically like a 2-to-1, right? And I'm betting that I'm wrong. I'm betting the stock goes up, right? To pull this off and then have it go backwards, oh, I guess it's March, 30 days, whatever. It's a maximum I make 200%, right? So 200% for 30 days. We'll see what happens. Okay. Whoops, you didn't see that. Let's try that again. All right, so I did this one here first for 50-50. This was a 16-15 put. Sold the 16 put, bought the 15 put. Over here, I sold the 14 call. We're trading at a little under 16, and then bought the 15 call just because it was close by. What does this do? Sell a vertical. Spreads $1. Credits 40 cents. We'll make this 47 cents. So then my risk is 53 cents. That'll be fine. And we're off and running for tomorrow. Oh, what's going on here with my currencies? We're just at $500,000. 341. Oh, need to check soybeans real quick. Soybeans. Hey, what do you know? Soybeans. Soybeans are down to 4.5. Corn's come down. What about wheat? Wheat. Okay, but beans, cool. And netty gas, right? December. All right, cool. Go back to the charts. All right, charts. All right, charts. Cenex. Pass. That one's pokey up there. It's foreign, Canadian. Oh, I suppose I should let my Canadian clients. I have no minds. Sell something against this one, no options. But you know what I'm saying? Oh, what's that? Still dollars? Yeah, whatever. It's a matter of time on this stuff. Because to me, I look at it, I was interested in this one, 14 and 15. And now we're up to 17 and everyone's involved. 16 for sure, right? It's an end game for me. Here's a little Harami cross here. Cat's Materials. I guess I did that one today. We shall see for about tomorrow. LT Foods, a little hot. Oh, that's India. These are logged charts. So this stuff is parabolic. So it's off the rails. Scientific Games. Short side of this. Options, yeah. Solo oil. Why are these going up? And oil's going down. I guess I could scan for American stocks only, but I like to see how they look here. Oh, here's a reversal right there. Traded higher, closed lower. This thing's probably going to come and fill this gap here. What's this one? Coherent. COHR. I swear I bought some of this already. COHR. COHR. Yep, I did. Okay, so where are we at? I think I'm wrong. So I sell this vertical. $1.75 credits is $5 spread. That's not enough for me. I'll make it $2.25. That means my risk is $2.75. So that's only an 80% profit kind of thing. These are all wrong. 315 debt. $3.10 credit. Sure, I'll take it. $3.10 credit. So $5 spread, $3.10. We'll make it $3.35. Good till cancel. So my risk is $1.65. I make whatever, 200% on it if it maxes out, right? Try that again here. Sell. vertical, $3 credit, $5 spread. We'll make it, my difference is $180, $180 is my risk. I make 320, good till cancel. Hallelujah, we'll see what happens. First off, selling it, I get the time deal on there, right? 2, I thought it's gonna go down, but I'm probably wrong, right? Whatever, all it is a mathematical thing. Risk is $5. Somebody's paying me $320. My risk is $180. That's how that's done. If I lose money, I was actually right in the market. But you still have your time premium in there that weeds out of it right away. What do we have going on here? Sell, vertical, $5 spread, 240 credit. I need a little bit more. We'll do 280, 285. And my risk is what? What do we get? 215? Is that right? 215 is my risk. 285, that'll be fine. I'll take it. Blah blah blah. See you later. Bye. All it is I'm making more than half. You know, my risk is less. I can deal with it as I'm going to get some sort of time's going to come out of it, right? So I'll see as I go along, you know, selling it, I collect it, and if I only lose money, right, if I'm right. You know, how often are you right in options? You're not. So I'm just benefit of the doubt kind of thing. All I know is I'm risking $2 to make $3. You know, that kind of thing. All right, did I switch back over? I did switch back over. Let's try this again, right? One more. We'll go up the ladder. Is there any more? Here's May. Here's then August. Wow, those are pretty expensive. Sell. Vertical. 260, about 285. Now we'll go 310. 310, $1.90 is my risk. You see it? $5 difference. Somebody's paying me 310, so $5 minus 310 is what, $1.90? So my worst case scenario, I lose $190. Best case, I pocket 310 minus commissions. I'll take it. Go over to this one, whatever. Sell a vertical. 245 debt. That's not what I wanted to do. Credit, yeah, we'll do 265, 285. We'll do 285, good till cancel. Sell, vertical, credit 290, how about 310? Whoops, 310. 315, pay for commissions. And the downside of all of this is that I am leaning all kind of the same way kind of deal. You're wrong, okay. You know, but you can't, you know, you're going both sides, you know what I'm saying? One side will work and the other, you're trying to get offsetting, and then you'll get real funky where iron condors between both sides and blah, 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 blah. But we'll get to that when we get to that. So switching back over to the whole scanneria. All right, poking through. This one's a runner, Venex, small cap, Brazil's up there. ADX is up there too, so we're just looking for an end game here in this Brazil. Look at that one, more India. All right, we'll leave you with this. Now here, let's try this then.